It's going to be actually absolutely reward. We have an exciting group of people here. We have Colleen Sullivan, partner and CEO at CMT Trading. We have Robert Dykes, CEO of Caspian, and we have Steve Ehrlich, CEO of Voyager. We probably, during the previous panels, we probably heard everything, what is security tokens and why do we need them, but here's the question, what are we going to do with them? We have a really tricky topic now, the impact on the legacy markets. Is there any? So, Colleen, you had a company that does crypto trading. Would you see security tokens as something you would like to invest in, something you would be interested in with the business you're leading?
Sure, yeah, so CMT Digital is a subsidiary of the CMT Group, which is a 22-year-old proprietary trading and investments firm. So we've traded in the traditional markets for years and years globally, and then we started trading in the crypto markets at the beginning of 2016. So with respect to security tokens, I mean, I think just from a pure trading standpoint, we'd be happy to trade them if there was liquidity and volume. Similar to how we trade in the traditional markets, we don't really have a view on the particular asset we're trading. We just want the volatility, the volumes. Similar to our crypto trading, we don't really care if the underlying asset is Bitcoin or ETH. So if security tokens take off in the secondary markets, we'd be happy to trade them. As far as investing in the space, we've not invested directly in any security tokens. We have invested in an exchange called Templum, which is, it's got the right permission set from the SEC to list and trade digital assets.
Okay. Steve, you have been working both in traditional capital markets, and now you work in the crypto market. So do you see a way that security token can change the way our capital markets work, our trading of the traditional securities work?
Well, yeah, I kind of feel like I'm the old gray hair in the room because I've been doing these capital markets for 25 years now. So I've seen everything from the time the markets were pick up the phone and call your broker down to the floor of the exchange to where we are today. And yeah, I think, and now at Voyager Digital, which, you know, we're publicly traded, so we're traded on an exchange, although it's the venture exchange up in Canada. We think security tokens will have an impact here. I think one of the problems, you know, in the securities markets today is you see things like the T+2, and security tokens can make it easier for securities to settle. I still don't understand why we're T+2. I think we can get to same-day settlement, but going to security tokens and digitalized assets will make that happen quicker, which gives customers the ability to use their money quicker and make more trades, which I think is where we all want to be. Think about, you know, Friday. If you had Uber and then all of a sudden Bitcoin started to run, if you were able to sell Uber, get your cash and move and make a quick trade to Bitcoin, you would do that. But, you know, with the security tokens and hopefully the liquidity that comes with those, we'll be able to see that happen.
Okay, Robert, your company actually issued tokens, even though it's not security tokens.
Security token.
But the tokens that can be used on your crypto trading platform. So can you talk a little bit, what does it actually give you other than another way of fundraising? So how does it impact the way you operate?
Well, you know, Caspian, we launched the platform about a year ago, and then we did the ICO in, I think, October of last year. Caspian is a full stack trading platform, so for a hedge fund, it has, you know, execution capabilities, compliance, portfolio management, et cetera. When we were venturing into the crypto business or thinking about doing it in 2017, it was from a place of we had built a business in traditional assets. So Tor is kind of where we spun Caspian out of. Tor is an equity trading platform globally. And so when we decided to get into crypto, we needed a way to get community around the platform, to get third-party developers to build on top of the platform. And so utility token made a ton of sense. And what that token does, in addition to giving rebates and discounts to the users of the platform, It also allows for governance of the platform and also to incentivize third-party developers and users to use the platform and build on top. And we're already starting to see that. We have a number of algo developers that have built on top of the platform. A lot of charting applications have been launched as well on top of the platform.
So do you expect it to really change the way you're operating when this token is widespread, when a lot of people are using it?
I mean, for us, kind of our vision is like an open source, decentralized Bloomberg. I think having the token really enables that to happen more quickly.
Mm-hmm. Well, so anyway, security tokens seem a serious game now when Société Générale recently issued 112 million worth of bonds on Ethereum blockchain, on public Ethereum. And these bonds are on equal terms with their usual bonds and were evaluated by Moody with a positive rating. So, where do we want to buy these tokens once they are in place? Would we want to go and buy them like a cryptocurrency on Binance? Or would we want them to be traded on NASDAQ as any usual stock? Or maybe this kind of hybrid places like T0, Open Finance, and others that are tailored for security tokens are the best place. What kind of marketplace we need to have a good, well-functioning security secondary market?
I'll start. I mean, I think you have to balance law and technology, right? Like right now, I feel like technology is outpacing our legal framework, but in the United States, security tokens are securities, and therefore they're regulated under our federal and state securities laws, which means that to the extent we want to trade them on a platform, it has to be an ATS or a registered securities exchange. So where we may want to trade them may be different from where we have to trade them in the United States if they're given that designation, which it appears the SEC is treating most crypto assets as securities. I think where we eventually want to go, though, is to have a number of different exchanges globally where security tokens can trade. You almost start to merge your public and private markets where they're fungible across all those platforms. That would sort of be ideal. And I think the regulators ultimately would want something like that so that traders have best price, best execution across all those platforms. But we're so far from that right now.
Yeah, and then like all the regulators across the globe should agree about that.
That's like the utopia
Seems
version.
like the way to go.
Well, that's, I want to couple on what Colleen said. I think you mentioned the word there, best execution. I think that's where Voyager and what we do with our routing system, we think these will be on multiple exchanges and they'll be across exchanges. And it's really important because we don't have interoperability of all the exchanges, nothing. There's no NBBO at all, whether it's regular cryptocurrencies today or even STOs down the line. Maybe we'll get there, but it's going to be hard in a global framework that you need brokers to actually go out and be the ones that find the liquidity across all these exchanges and bring back to the customer a best execution or best available price across those exchanges. And it's an important role. Someone said it in the earlier panel about clearing and execution and brokers. Brokers play a really important role in the growth of STOs because we have to be the ones that connect to the different exchanges, Templum, et cetera, and bring that value back to customers to make it easily accessible for them to take place in the secondary market.
I mean, I'd kind of take a little bit of a slight difference of opinion. I mean, I think technology, it will allow you to seek out best execution, best price for the quantity or the tokens that you want to trade. I mean, if you look at the algorithms that are coming out, whether you're trading, whether a token's trading on a decentralized exchange, it's trading on a centralized exchange, whether it's trading in Singapore or the U.S., we can build that connectivity and essentially create that central order book virtually in the platform, and I'm sure that's a lot of what your arb trading does, is to find those inefficiencies. So I think technology has a huge place to play in this evolving world. What I hope is actually there's harmonization in regulatory framework. I think that's the key for really an explosive growth in this space.
Right, so like regulation is one of the most important piece of that infrastructure that we actually need. Now we have a bunch of guidances from the SEC. We have everyone's favorite Howey test. We have some regulation, Regulation D, Regulation C, Regulation A for security tokens. Is that enough? Is there anything still lacking? What's still missing? What kind of clarity is still not there?
So, do you want me to?
You can start.
Oh, sure. So I think on the initial issuance, I think we've got, we know what path we need to follow. You just mentioned like Reg D, Reg A, whatever it may be for the private offerings. And I think when you get into the secondary trading is where we could use a little bit more clarity, specifically around custody, both the broker-dealer, what's good possession and control, qualified custodian rules, who's really a qualified custodian for security tokens. You get into, do ATSs also need to register as clearing agencies or transfer agents? Can the blockchain itself perform those functions? Could the blockchain be the transfer agent? There's also been recent discussion, do miners need to register as broker-dealers because are they accepting transaction-based compensation? So I think some of those areas we need additional guidance in.
Yeah. I mean, I think right now there's regulatory arbitrage throughout the world.
Huge.
And I think in order for the STO market and the whole crypto space to become more legitimized, there needs to be some sort of standardization, especially, as you say, in the secondary, but even in the primary and the whole issuance space. I mean, people would look at Caspian in the US as probably a security token, but the rest of the world looks at it as a utility. So, like, what do I do?
Well, it was really interesting in
what
block.
do you do?
That's right.
You exclude U.S. persons.
That's right. You go offshore. Yeah, like in Blockstack's Reg A filing, I thought it was interesting that they, in talking about that, one of the founders mentioned that they received opinions from a number of different other jurisdictions that their token is a utility token, but they felt the U.S. was an important market, so they went through this really expensive, drawn-out Reg A process just so and they're treated as a security token here.
That probably cost them over $1 million to go through that.
Well, we definitely need more regulatory clarity, and I think other pieces of that are the whole financial side of it. When you think about a clearing broker-dealer and custody and how you're going to handle that from a net cap perspective,
Yes.
I don't think anybody's I haven't seen but one article written about that.
Yeah.
So there's all that financial side. But there has to be some sensibility to it, to when you look at utility token, if the rest of the world is saying like your token is a utility and the US is a security, it's pretty easy. And we look at ours, we own a wallet called Ethos, we have a token, and it's like, we're a public company, there's no security behind it. So there's simple, easy things to look at when you see that. And I think we've got to get closer to a better regulatory framework to make some of those decisions, to open the US up for investors to participate in this.
Okay, I hear the words qualified custodians, settlement regulations. So I wonder where all the blockchain cypherpunk spirit went. We're not eliminating, the middlemen anymore. Are we actually creating a clone of existing markets, or not? And if we do, how will it benefit the investors?
More efficient. I think it'll become more efficient. I mean, what I talked about was that T+2 settlement should become immediate, right, off the blockchain. Things should happen so customers get their money. They could then loan their money if they want. They can then earn interest on the money and gain those 2 days instead of the intermediaries making that money. Maybe the individual should start making that money, right away when they execute that trade, not 2 days later. I think it'll take the inefficiencies. We might not call it inefficiencies because it's intermediaries' plan, but that's what it really is.
Yeah, I think it would be a mistake to cut and paste traditional market infrastructure and dump it into what we're looking at here, because you can use the technology itself to make this more efficient, fair, transparent. In addition to settlement, you can use identity tokens, you can use smart contracts, you can use blockchain analytics. I mean, these are all new technologies that should make this a better marketplace.
Yeah, I violently agree.
Well, so down with inefficiencies, and thank you. Please thank our panelists.
Thank you.
Thank you.